Dr. O. Let's just hop like right into it. We're looking at this fresh. We're recording this in the morning on Friday, March 7th. The jobs report came out showing 151,000 new jobs. It's a little bit better than last month, and frankly, maybe a little bit better than you or I thought it might be.
Yeah. No. I think I did expect it to be. I guess you didn't pay attention to the column in the Center Square, correct?
But I'm talking about today. I mean, I sort of after the kind of the week that we had, and sort of
I did expect it to remain pretty good, but it's still a slowdown. It's a slowdown if you look at the 3-month average. The 3-month average was about 200,000 jobs. We're at 151. For private sectors, 169. We're at 140. The labor market is strong, but still very much cooling. And then we got I think the big news here was the decrease in the number of federal workers. Federal government payrolls shrinking by 10,000 in February. You're right. Overall, the economy, layoffs remain low, hiring, remain low. But now we're seeing some layoffs, some federal government workers being laid off, and it's just the beginning. I think we expect to see a bigger slowdown next month. The combination of the uncertainty surrounding tariff policy, right? Up and down. One day we have tariffs, and the next day we don't. The market is afraid. We see some fears. We see growth fears causing the stock market to kind of panic a little bit, investors to start panicking a little bit. And that's the impact.
Would now be a good time to talk about the panic in the market from the past week?
Look, it is the impact of policy uncertainty. It's the fear, right? It's like if you don't know what's coming next, you don't go out and invest in a new business and growing your business. You don't hire new workers. And so you have that going on. And at all levels, you see it in the small businesses, in the, confidence index, the NFIB surveys. You see it at the conference board also shows, tracks this stuff. And you see it everywhere. And so businesses are kind of holding back and waiting to see what will happen next. It's very difficult to make any kind of reliable forecast when you're not sure what's going to happen next. And so that, I think, is going to start to play itself out in the labor market in the months to come. And if you add that to the impact of federal job cuts, you could have a continued increase in the unemployment rate. We called the small uptick in the unemployment rate at 4.1%. It's slowing. The labor market's still slowing. It's slowing in an orderly manner, so it's a good thing that we're not seeing a big jump, a big crack yet. But we did see in the if you look at the unemployment claims, I like to track the 4-week moving average of initial claims. And if you looked at the initial claims, I did talk about it back on Monday, I believe, in the column. If you look at initial claims, they ticked higher, they moved up, and I expect that to continue to happen if we continue to see these job cuts. So anyway, that's kind of what's going on in the labor market. It's still somewhat strong, but starting to get in that territory where we could start to get a little nervous, right? If you look at 2019, job gains, they're in the range between 100 to 200 per month. We're still in the range, but we don't want to see the labor market deteriorate further. I think the good news is wage growth. Wage growth has remained somewhat healthy, but also cooling on a year-over-year basis. Wages are now just 4% higher than they were a year ago, compared to, I think, 4.1 or 4.2% last month. So you're really seeing the loosening, slow but steady loosening of the labor market is continuing. The Fed is not doing anything about it yet. I think they're going to continue to wait and see. But yeah, this is developing. This is a breaking story this morning.
Yeah, I mean, and it's like, where, I guess I'd ask you this: where do you feel like we're going to go from here? I mean, I was just looking at this story that was on Yahoo. An economist by the name of Joe Bersalis. He's with the firm
Yes.
RSM. Let me read you his quote because I think it's kind of interesting. He referred to this as a quote unquote Goldilocks print. He said, "We know over the next 3 to 6 months, we're going to see some of the disruptive effects of in Washington start to show up in both the economy and in the labor market. But for now, what this tells us is that we really only need to add about 100,000 to 150,000 jobs a month to keep employment stable." That's exactly what happened. So it's the net gain over the net loss. I mean, like the Doge report. I'm almost, I don't know if this has changed, but very early on, in terms of like this, like mass layoffs in the federal government, they can only process about 10,000 of these layoffs or job cuts a month because of some nonsense in terms of how they actually do this on paper. Like this is not something that exists. It's just in a computer form, but it's literally like paperwork. So I don't know. So what do you make of that? I mean, in terms of the quote unquote Goldilocks print.
Yeah, look, it's nice given what we're seeing, but we also know that things are going to continue to slow further. And so when he says 100,000 jobs, we're probably going to be there next month or the month after, and then you're going to start to see, potentially the unemployment rate starting to increase further. And so I think we got to be very careful. At least the administration has to be very careful. Of course, the Fed will be watching this.
Yes.
And I think the Fed's bias for supporting the labor market will eventually kick in if the labor market starts to continues to deteriorate further. Of course, I don't know what it's going to mean for inflation and the inflation mandate, given that inflation remains somewhat above target. Perhaps that cooling in the labor market will also bring some cooling on the inflation front. We'll see.
All right. Well, let's call it good there.